Hey, what is up guys? So digital banks are finally coming to Malaysia, or should I say Malaysia is finally going to have their own digital banks. What am I talking about? What are digital banks? Who are the potential digital banks? How will this affect you or the local economy? Stay tuned because I will cover all of them in this video. But before we begin, do you know that studies have shown that if you smack the like button down below, you will make this person a happier boy at no cost to you whatsoever? Now, how great is that? Thank you very much for that. So without further ado, let's jump right into today's content. To give you a little bit of context, on the 31st December of 2020, Bank Negara Malaysia released a set of digital banking license framework, basically asking local participants to fight for up to 5 digital banking licenses in Malaysia. How is this important, right? Well, moving forward, the existence of digital banks will affect the way you bank or just the way you handle your finance, your credit score, your insurance, your investments, your loans, and just basically everything finance related, which is why I'm sharing this with you today. So what exactly are digital banks and how do they differentiate from the current banks that we all have today? Well, basically it is a bank but fully operated online without any physical branches or forms or just any of those 1990 stuff. Or in Malaysia's context, that is still a 2020 thing because we still need to queue up in the physical branches and fill up tons of pages of forms, you know. Ugh. I'm not kidding you, a few weeks ago just before Raya, I went to Maybank branch to apply for a new credit card and apparently I need to fill in like 8 to 9 pages of forms and declarations and I need to wait for at least 2 to 3 weeks for the credit card to process. What a pain. The point of me sharing this story is with digital banks, we can technically remove all of those unnecessary paperwork, physical branch visits and long processing time. All you will need is just your IC, and the digital bank's technology and algorithm will handle the rest for you within minutes or even seconds. Now, how convenient is that? So why do we need an all-online digital bank when we have Maybank to You, CIMB Clicks, Touch and Go e-wallet, GrabPay that can also do most of the stuff? Well, to put it in layman's terms, digital banks are basically your traditional banks but on steroid. Imagine having an all-in-one finance app that can basically do most if not all of the features that you can find in your bank right now. Apply for personal loans, car loans, mortgages within minutes thanks to its credit scoring algorithm, while being able to subscribe to insurance products, medical card or life insurance, while having access to wealth management products like robo-advisor, money market funds, unit trusts or mutual funds, while being able to invest in the local or foreign stock market, while being able to buy and sell or transact your cryptocurrencies, while being able to pay all of your electricity and water bills or telephone bills, while being able to track all of your expenses from your salary down to your latest purchase on your favorite shopping apps, while being able to rack up loyalty points to gain rewards or discount coupons. All of that while being able to smack the like button down below for the YouTube algorithm. Okay, maybe not for the last one, but you get the drill. The sky is the limit. I can go on and on and on, but feel free to have a look at digital banks across the globe, such as WeBank in China, Kakao Bank in Korea, Monzo, Revolut, and Starling Bank in the United Kingdom, or N26 in Germany. They are all super interesting and trust me, you will want all of those features in your mobile phone, especially in the 21st century. But too bad Malaysia is still a developing nation. Oh well. Now, after going through all of those high level stuff, let's dive a little bit deeper into the digital banking framework proposed by the Bank Negara Malaysia. Sit tight because this document is 27 pages long and I will make sure we don't miss out every single detail. No wait, I'm just kidding, ain't nobody got time for that. Ain't nobody got time for that. That's the reason why you're watching my video right now, to get the most out of your time, right? While I spend my Sunday evening reading this 27 pages long document because MCO, we can't go out, there's coronavirus, I don't have friends, we cannot even go out, we can't travel, there's no place we can go, I don't even know what I'm doing with my life right now. Just kidding, let's jump right in. The first thing that pops out to me is Bank Negara's intention to offer banking products and services to underserved or unserved market almost wholly through digital or electronic means. To put it in layman's terms, underserved or unserved market usually refers to those people that traditionally the banks would not lend money to. It could be due to their lack of financial track record or just bad credit history or just being unable to provide those necessary documents to prove their monthly income or whatever that is. Basically, they are the group of people that the banks will try to avoid lending money to because the risk of them not being able to repay the loan is significantly higher. For example, the makcik selling nasi lemak in your taman, or the tanggaci that works on a freelance basis and unable to show any proof of stable monthly income, or the abeng that provides illegal money lending service, or just any small and medium-sized enterprises and startups who promises a great deal of technology or business model but not being able to provide any proof of income, or just something along that line. So in this case, Bank Negara wants to make sure that all of these high-risk borrowers are taken care of to ensure the growth of the local economy from all segments. Moving on, the next thing that pops up to me, Bank Negara said that they will review whether the application will be in the best interest of Malaysia, including the degree of significance of Malaysian participation in the financial sector. In this regard, preference will be accorded to an application where the controlling equity interest in the proposed licensed digital bank are held by Malaysians. So two things that we can get from here. Firstly, Bank Negara prefers the participants to have prior experience in the financial sector. This means that all of those players, from the incumbent banks to the e-wallet players to just basically any fintech players, will have an upper hand here. The second preference is the controlling equity interest. This would mean that Bank Negara prefers for the majority stake of the digital bank to be controlled by a Malaysian-owned company. Why is this important, you ask? Well, let's take a look at Singapore, where they also just recently announced the winner of their digital banking license. We have Grab Singtel and C Group, which is the parent of Shopee, winning the full bank license, where all three of them are actually Singaporean companies. However, under the wholesale bank license, we have N Group winning it, and if you don't know already, N Group is actually the subsidiary of Alibaba Group, an e-commerce giant in China running shopping platforms such as Taobao, AliExpress and Lazada. So my guess is Bank Negara wants to retain the control of the digital bank within Malaysia, because obviously this would tamper with the country's financial soundness and whatnot. I'm not sure whether this is the best move, because traditionally we have been very conservative, especially in the finance sector. Case in point, TD Ameritrade, whom is a regulated broker in the US as well as in the Singapore, but they have been listed under this SC or the Security Commission's alert list. I don't know, man. Why don't you let me know in the comment section down below, what do you think? Should Bank Negara be so conservative, or should they open up just like the Monetary Authority of Singapore? That would be an interesting discussion. Anyways, jumping back to the document, the third thing that I find interesting is the implementation timeline. Basically, upon the grant of license, the winning digital banks will have a short period of time for operational readiness before they commence their operations, which would last a minimum of 3 years or up to a maximum of 5 years. Within that 3 to 5 years, I believe this is the phase where digital banks learn about Malaysia's financial landscape, as well as working with Bank Negara to improvise and, just revise the financial products that they roll out to consumers like us. So knowing that, we can now plot a very rough timeline until the first day that we see the first product from the digital banks. On the 30th June 2021, this is where the application submission deadline for the license. 9 months later, by March 2022, the license will be granted to the successful applicants. And assuming they take 6 to 9 months to set up the banks and stuff, we can expect to see the first digital bank in Malaysia somewhere in January 2023. So yeah, I hope you are excited as I am, because I genuinely look forward towards all of these new advancements in our local finance scene. Moving on, let's look at the potential candidates of the digital banking license. And on hindsight, we can assume that most of the incumbent banks or just local fintechs will be part of it. And rightfully so. Looking at the other digital banks in the world, most of them are majority owned by incumbent banks in the leftmost column, as well as big tech and fintech in the middle column. But then again, there are more than 200 fintechs in Malaysia, and it would be almost impossible for all of them to win the license. So realistically, the 5 winners of the digital banking license will most likely be an established company with strong financials, have experience offering or dealing with financial products, and most importantly, have the most available use cases for them to take advantage of. If you haven't guessed it already, basically I'm referring to companies that already have a high presence in our mobile phones right now, such as the banks, the e-wallets, the telcos, and e-commerce. So if I were to group them into these 4 categories, and by cherry picking the larger players, this effectively narrows down the entire contenders to these 4 main groups. Now, I know some of them are foreign owned companies, so instead instead of looking at them as individual participants, there is a high chance for some of them to team up and form a consortium to run for the digital banking license. So what do you think? Which company are you rooting for? Or do you hope to see any of them team up and form a consortium? Let me know in the comment section down below. So having covered most of the things that you need to know already, I will now share with you my personal opinion and predictions on what to expect for the time to come. Realistically speaking, yes, you might be able to see the first digital banking product sometime in 2023, but to be honest, Malaysia still have a very long way to go before that even becomes a common thing. And this is by no means the fault of the rakyat or the government, because there are a lot of things that goes behind a successful digital bank, such as the depth of the credit scoring algorithm to correctly or accurately score a loan application, the product design of the digital bank's financial offerings so that it does not cannibalize the incumbent banks, the technology stack required for the digital banks to integrate with the finance products, investment products, insurance products, finance trackers, and whatnot. Plus, the most important thing of all, the cost of running a digital bank. Just because they are all online services does not necessarily mean they are cheaper to run compared to the incumbent banks with physical branches. Traditionally, digital banks are known to be cash burning company, and some of them are not even profitable even after running for 5 to 7 years. Just look at this data provided by McKinsey. You can see that the digital banks in grey color requires as much capital investment as the traditional banks in light blue color. Having said that, in my honest opinion, I think we still have a very long time to go before digital banks even become part of our daily lives. And in case you're wondering whether the digital banks will affect the local banks, I think maybe in the short to medium term, most probably no. 5 years from 2023 is about 2028, so there is a long time to go before they even threaten the position of the incumbent banks. And let's not forget, our country is still a developing nation and we can't risk the overall well-being of the financial industry, else it will be a double-edged sword to our local economy. If you don't know already, incumbent banks like Maybank is owned by Permodalan Nasional Berhad (PNB), which also runs the Amanah Saham Bumi Putra (ASB) fund, which will also have ripple effect towards the EPF. So there is no way Bank Negara will allow the digital banks to cannibalize those banks. And also, just another thing that bugs me, the objective of this digital bank is to serve those underserved and unserved market, which to be honest is pretty challenging or tricky, should I say. The rates of loan default will be sky high up to the moon, and from a business perspective, I am skeptical that the small profits will barely able to cover all of those loan losses, let alone break even. Well, regardless, I think they need to be very creative in the way they structure the financial products in order for them to stay afloat. I don't know, man, but that is just my personal view and it doesn't really mean anything. Why don't you let me know in the comment section down below whether targeting the underserved and unserved market is the right move from Bank Negara. Alright, that is all for now. I hope this video gave you some insight as well as a glimpse into the future of the Malaysia's financial landscape. And if it did, help me smack the like button down below, subscribe if you haven't already, and I will totally appreciate that. Thank you very much for watching. Stay safe, stay invested, and as usual, I will see you in the next one.